everyone. Welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited. And as I speak to all of you all this Monday morning at around about 10:15, markets did open up on the positive note, saw a little bit of profit booking, but has again regained the momentum on the upside. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee, Dollar, and crude oil. Sensex is up about 580 points, and the level is 79,130. Nifty is up about 170 odd points, 24,025 is the level on Nifty spot. Bank Nifty, tremendous amount of positivities, 895 points up, and the level is 55,186. On the rupee dollar and crude oil, strength on the rupee against the dollar level is 85.10 rupees to a dollar and strength of 0.27 paise. On Brent and NYMEX, because of the development on the global front, we've seen a downtick. $66.92 to a barrel is Brent, and $63.69 to a barrel is NYMEX. Expect the downward trajectory on the crude oil front, at least for some time now. And the reason is the positive news in terms of geopolitical development that we saw. Some amount of positivity. Expected to be on the lower trajectory crude oil front because of the slowdown fears across the globe and of course the resolution on the geopolitical front as we go into the future. On the markets, well friends, we spoke last week. In fact, we couldn't interact because of the holiday on Monday, but the week before that, the momentum on the positive side will continue is what our outlook was, and the levels that we had mentioned was 23,800 on the higher side, and we had mentioned that if we are able to give a close above that, then movement towards 24,000 and then finally towards 24,300 to 24,500 cannot be ruled out. Slowly, steadily, we are approaching those levels, and in case today, tomorrow, if we give a decisive close about 24,000, then possibility of witnessing levels of 24,200, 300 or 24,500 is also a possibility. Triggers that have been driving the positivities, of course, the slowdown or meltdown on the news flows from US as far as tariffs is concerned. Don't want to go into detail because all of us know what the details have been. And the second contributor, which we believe is the biggest support to the market, is the fourth quarter earnings. IT has been subdued, whatever we've seen, but over the weekend, on Saturday, we saw numbers from HDFC Bank and ICICI Bank. HDFC Bank was more or less in line, a little bit better in some parts, but ICICI Bank was a stellar performer. And we expect the support to come through in form of fourth quarter earnings to the market. Incidentally, friends, this week there are 100 plus companies, both in the listed universe, large cap as well as mid cap, which will announce their fourth quarter numbers, and we expect this to support the markets. Volatility index, India VIX, has been a little bit on the upside. Currently, as I speak to you, India VIX is at about 15.74 with an uptick of about 1.62%. Gradual slowdown or a downward trajectory in India VIX is what we expect. Fund flows, well, FIs last week were more or less on the buy side. Domestic institution took the opportunity of the uptick momentum and that they were buying at lower levels. They have been on the negative side, hell side, booking some profits. But sooner or later, I think both these institutions, that is FIs and DIs, could turn into positivity, and that is also going to support the market. What will be the triggers for the market, at least in the immediate near term? Well, news flows related to the tariff from US and rest of the world. And as it has been reported that countries have approached the Trump administration to iron out issues, India is also working its way out. Vice President Vance is in country this morning, visiting New Delhi and meeting with the Prime Minister. Expect some positivities to come out of this meeting. And on the second parallel path that the Indian government is working is to finalize the FTA and BTA, that is Foreign Trade Agreement and Bilateral Trade Agreement. And along with that, of course, working out on revision of tariff on goods and services that comes into India as from US. So expect some kind of resolution positivity. But markets will be driven more in terms of news flows based on based out of US with respect to tariff, and of course what development happens with rest of the world with United States of America. There is some kind of short covering also which has supported the market last week on Thursday. Of course, last week, friends, was a truncated week. We had a holiday on Monday and on Friday, and despite of the truncated week, the markets, that is Sensex and Nifty, has managed to recover more than 4% during the 3 trading days that we had last week, and the momentum continues as I speak to you. So there could be some top-heavy feeling given the kind of recovery we've seen last week, and of course we are witnessing the recovery this morning. Short term, medium term, you might see some kind of profit booking coming into the market, which may possibly cap the move. But the undertow remains extremely positive on the put call side, on the futures and options side. There have been short covering, which has also added to the sentiments to the market. And if the fourth quarter numbers, which we are going to witness this week and the week after, if they are going to be supportive, then I think the performance of Indian capital markets has been much better post the 2nd April announcement of tariff and the pause for 90 days. Our sense is that India has been much resilient compared to the developed markets and emerging markets. And I think we should possibly stay this way. There has been positive news flows in terms of inflation, which is well within the control. Expectation of 2 more rate cuts by the time we end this year is something that the market is optimistic about, and that's what the word on the street is. So that's a positivity. And of course, in terms of GDP growth rate, even at 6%, India is much better placed compared to the rest of the world. So overall, the macros that indicate to a little bit of more stability in the market, subject to, of course, as I mentioned, news flows with respect to tariff and what is the news flows from the rest of the world. So for traders, our view is that if you are making decent money in terms of your short-term trades, then you should possibly book some part profits. If you're an investor, these are great times to build a portfolio. We are not saying that we will be immediately out of the woods. It will take some time to have more clarity and stability into the market. And in that kind of a scenario, this is a perfect market to look at long-term investment ideas rather than short-term bets. Every time we interact with you on Monday morning, we give you 2 investment ideas. We have identified 2 this morning. One is from the FMCG pack because of the discretionary spend. And of course, last week we also heard the Met Department stating that the year 2025 monsoon is going to be above normal, and the rain gods are going to be kind enough to shower their blessings on our country. So agri productivity will be high, and that will translate into higher income for semi-urban and rural India, and that will support the demand on the higher side, volume growth, and of course the profitability. So Dabur is the stock that we have identified from FMCG pack. Approximate targets of somewhere close to about 600. These are long-term investment idea targets. So Dabur, first one from FMCG with a target of somewhere close to about 600. Second one is, of course, I mentioned about earnings last week on Saturday, ICICI Bank. A stellar set of number. We had a conviction buy call on ICICI Bank before, and after the earnings, there has been upward revision in terms of targets for ICICI Bank. Tremendous amount of improvement in NIMs, in improvement in gross and net NPA. Provisionings have come down, and the balance sheet is becoming stronger and stronger. Our view is that overall banking and finance should do well in terms of earnings visibility, not only for this fourth quarter, but also for the new financial year this time, and of course the financial years to come by. Purely because of the credit growth demand, improvement in asset quality, and lower trajectory in terms of gross and net NPA and provisioning coming back to the market. So ICICI Bank is the recommendation on the fundamental side long term. Approximate targets of somewhere close to about 1,650. Risk reward extremely favorable, and just in case if the market has to throw any kind of unpleasant situation in terms of downward correction, please use that downward movement in the market to accumulate these stocks. Don't put all your money at one time. Do a little bit of homework at your hand after understanding the recommendation. Gradually, step by step, start allocating your capital to these 2 names. And on dips, gradually go on buying at lower levels from a fundamental long-term idea. We expect 24,200 to 300, the first milestone, and then possibly if you are able to maintain about 24,300 decisively on closing basis, then one cannot rule out 24,500 as well. So trade with a positive bias, and if you are a trader, try to maximize your profit by putting stop losses in the system. Thank you very much for your patience, hearing. I'll see you again next week. Till then, please do take care of your health. Bye bye.